Hello and welcome to another MCO update on ADA. The ADA chart is still consolidating here in a broader range. It looks like the market is trying to form a top there, but overall we haven't really seen any break below previous swing lows. So the market is still holding above the Friday 9th of May low, and it's just chopping around up here a little bit. In previous updates, I explained to you in much detail, and especially I think yesterday's video was quite extensive, that we're likely working on the D wave of the triangle pattern. So I'm still tracking a potential Elliott wave triangle that started to develop in January. That view has been consistent, for various months now. And all I can say is that the move to the upside counts quite well as a WXY structure. And in the Y wave, I am tracking an A, B, C structure. So the A wave could form a price top in the current region. A B wave should occur then at some point. Maybe it's already started. And then from there, a C wave rally can continue. That would be, in my opinion, the ideal pathway. That's what I'm tracking here primarily, right? That we are still working on the D wave, basically. So in this scenario, then, the idea is that in the Y wave, and by the way, this is a very complex wave count, so it might change at some point, but the thesis would be we have an A wave up. I mean, yeah, we could get a B wave pullback and then a C wave rally from there. This would be something I'm tracking, something I'm watching for. So the B wave itself would be an A, B, C structure, and the internal B wave might have topped here. Yesterday, I shared with you Fibonacci resistance, and the Fibonacci resistance area has been respected so far. It's between 81.6 cents and 85.3 cents. This is standard, you could say a standard retracement area for a B wave. And if the C wave really starts from here, then it should take the price a little below the A wave low that formed on the 13th of May. So maybe we will reach the 74.5 cent level. That being said, there is no sign at the moment that we're going for a more direct upside breakout. That would require a break above 85.3 cents. That might happen. So essentially, it's just sideways consolidation. There is not much clarity, but I can tell you that this is the support area I'm watching. And if the market shows some downside momentum, it's likely going to be the C wave of the B wave. Or alternatively, we could even see this as a 1-2 setup because the move up was in 5 waves. But this is the main support area I'm watching, between 77 cents and 68.5 cents. In other words, I'm looking overall for higher prices as long as we're holding above the 68.5 cent level. Now, that being said, we're far away from that level right now. But if some downside momentum kicks in here, which will be further confirmed with a break below this last swing low there, here at around 79.8 cents, well, then obviously risk would reduce, especially when we get into this area. Better reward to risk ratio, and then an impulsive reaction to the support area could mark the beginning of the C wave to the upside, which should unfold in 5 waves, as shown here. Let me shift everything to the right. And I can also give you a more precise target for the internal C wave to the upside once we have a low in place for white wave B. So essentially the parameters remain unchanged. Market hasn't really made a decision. We had a nice rally, and this is just consolidation, a bit of a cooling off, which might need one more low to complete. That's the update on ADA. Hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership. Thank you very much. Bye-bye.